Students, today we are going to learn the very first illustration for death of a partner. First, I will read the question. Rekha, Menka, Mukta were partners in a business sharing profits and losses in the ratio of 2:1:1 respectively. Their balance sheet as on 31st March 2019. Liabilities, capital accounts for 3 partners. Then creditors, bills payable, general reserve. Assets, plant and machinery, debtors, furniture and bank balance. Mukta died on 1st July 2019. Now students, you have to see that this is the last accounting year's balance sheet. After that, from 1st April 2019 till 1st July 2019, Mukta was alive. So Mukta was alive for 3 months. So that you have to calculate the period, and that you have to keep in mind that Mukta was alive for 3 months. Then we are going to learn the adjustments. Now first, plant and machinery was to be revalued at rupees 70,000. So here you can see that as per the last balance sheet, the value of plant and machinery is 60,000. While here the value of plant and machinery has increased by rupees 10,000. And here in the question they have asked you to prepare profit and loss adjustment account, which is also known as revaluation account. In admission of a partner, we have already learnt to prepare revaluation account. So you know that whenever the value of asset increases, the difference is recorded on the credit side of the revaluation account. So here the entry will come on the credit side of the revaluation account by plant and machinery account rupees 10,000. Then further it is given that RDD is to be created at rupees 2,000. Reserve for doubtful debts. Whenever RDD is created, value of debtors decreases. So whenever the value of asset decreases, the difference is recorded on the debit side of the revaluation account. So here the entry will come on the debit side to RDD account rupees 2,000. Then you have to check in other adjustments. You have to learn whether there are any other adjustments regarding the valuation of assets and liabilities. So here we cannot see any other adjustment regarding the revaluation of assets and liabilities. It means we can close the revaluation account. Now here you can see that the credit side balance is higher than the debit side. So there is a revaluation profit of rupees 8,000. This is divided among all the partners in their profit sharing ratio, which is given in the question, that is 2:1:1. So here the revaluation profit is divided between Rekha, Menka and Mukta. Then it is transferred on the credit side of all the partners' capital account. Here you can see the entry by profit and loss adjustment account into bracket profit 4,000, 2,000 and 2,000. Now we are going to learn other adjustments which are given in the question. The drawings of Mukta up to the date of her death amounted to rupees 10,000. It means this is the amount of goods or cash withdrawn by Mukta during this accounting year. So as per the format, you know that interest on drawing or amount of drawing is recorded on the debit side of the partner's capital account. So here the entry will come to drawing rupees 10,000. In the amount column of Mukta, we have entered the amount rupees 10,000. Then next, charge interest on drawings rupees 1,000. So this entry will also come on the debit side to interest on drawing 1,000. Then next it is given her share of goodwill should be calculated at 3-year purchase of the profit for the last 4 years, which were given as under here. First year, second year, third year and fourth year's profits are given. Here the working is given. I will explain the working. It means you have to calculate the average profit now. So here valuation of goodwill, total profit of 4 years is given as per the question. Here in the question they have given the total profit for 4 years, rupees 1,50,000, rupees 1,30,000, then 70,000 and 50,000. So here they have taken the profit for 4 years. Here there is a printing error. Here they have given 15,000. It should be 1,50,000. So 1,50,000 plus 1,30,000 plus 70,000 and 50,000. The total comes to rupees 4 lakhs. Since this is 4 years profit, you have to divide it by 4. So you know the formula for the calculation of average profit is total profit divided by number of years. So 1 lakh is the average profit. What is further given in the question about the valuation of the goodwill? It is given that it is to be calculated at 3 years purchase. It means the average profit is to be multiplied by 3 years purchase. So 1 lakh into 3. So 3 lakhs is the goodwill. Now 3 lakhs is the goodwill for all the partners. We have to calculate Mukta's share. So as per the profit sharing ratio, here the Mukta's share is 1. So you have to calculate the goodwill or the share of goodwill for Mukta, that is 3 lakhs into 1 divided by 4. So 75,000 is the share of goodwill for Mukta. So it is to be recorded in the partner's capital account. By goodwill account, 75,000 is recorded in Mukta's column. Now further it is given in the question that the deceased partner's share of profit up to the date of death is to be calculated on the basis of average profit of last 2 years, that is third and fourth year. So third and fourth year's profits are given here, 70,000 and 50,000. So here also the working is given for the calculation of share of profit. Profit of current year is equal to average profit of last 2 years. So 70,000 plus 50,000 divided by 2. 1,20,000 divided by 2 is equal to rupees 60,000. So this 60,000 is for the whole year. Now you have to calculate for 3 months because Mukta was alive only for 3 months. As this year started from 1st April and she died on 1st July. So April, May and June. Only 3 months she was alive. So 60,000 into 3 divided by 12. So the profit for 3 months is rupees 15,000. Now from this 15,000 you have to calculate her share. So her profit sharing ratio is 1. And for all the partners the profit sharing ratio is 2:1:1. So 15,000 into 1 upon 4 is equal to 3,750 is the share of profit for Mukta, which is recorded on the credit side of her capital account. So here you can see by profit and loss suspense account 3,750. Now you have to check in the old balance sheet if there is any general reserve or reserve fund or profit and loss account is given under the liabilities, or else the profit and loss account is given under assets. So here you can see that the general reserve is given under liabilities. So either it is divided among all the partners or it is given only to the deceased partners column. You can record this amount. So general reserve of 16,000 is divided into this old ratio and it is transferred to partner's capital account, or else you can calculate only Mukta's share. Both the treatments are acceptable. So here the entry is recorded by general reserve and the amount is divided among all the partners in their old profit sharing ratio. After that, you have to calculate the balance carried down for the continuing partners and then the amount to be paid to the deceased partner. So here the credit side total for Mukta is 1,18,750. From that you have to subtract 11,000 on account of drawing and interest on drawing. So rupees 1,07,750 will be recorded as Mukta's executor's loan. So it is a liability. Now we are going to learn how to make the changes in the balance sheet. As you know that the old balance sheet is given here. So here now there will be only two partners, Rekha and Menka. So their capital amounts will appear in the new balance sheet. So here it is recorded capital accounts Rekha and Menka. This is the balance carried down in the partners capital account. Here you can see this. So this will appear, these two amounts will appear as capital for Rekha and Menka. Then this amount, Mukta's executor's loan account, will appear as a liability in the balance sheet. So here these three amounts are recorded. Then for creditors and bills payable, the amounts will remain the same because there is no adjustment given for them. So creditors 18,000 and bills payable 2,000 will remain the same and it is recorded on the liability side. So here these two amounts are recorded. So this is our liability side. Then we have to make the changes on the asset side. As you know that the value of plant and machinery has increased by rupees 10,000. As per the old balance sheet, the value of plant and machinery is rupees 60,000. And as per the adjustment, it is revalued for rupees 70,000. So that you have to make the changes. Plant and machinery 60,000, add appreciation 10,000, outer column 70,000. Then for debtors, the value of debtors is given 50,000, but as per the adjustment, RDD is to be created of rupees 2,000. So we have to subtract this 2,000 from the value of debtors in the new balance sheet. So debtors 50,000 less RDD 2,000. So outer column 48,000. Then we are going to see about the furniture. Here there is no adjustment given for furniture. So the value of furniture 30,000 will remain the same. Then about the bank balance. What is given in the old balance sheet? Bank balance of rupees 60,000 is given. But here as per the second adjustment, Mukta had withdrawn rupees 10,000. So cash goes out. So that you have to show in the new balance sheet. Here 60,000 minus 10,000, only 50,000 bank balance will remain. Then profit which is given to Mukta, that is 3,750. From that interest on drawing is subtracted. So the remaining amount will appear in the balance sheet under the assets because this profit is given to Mukta. So the second effect will be recorded under the assets. Now goodwill is raised. So asset has increased. So this goodwill will appear in the balance sheet. So in this manner we have to make the changes in the balance sheet. So for that purpose, first you have to check all the amounts in the old balance sheet. So this is how you have to make different accounts during the death of a partner.